So I wanted to come on really quickly and just kind of talk about some things that I have been seeing in some hosts and co-hosts books when it comes to their bookkeeping. So if you are just wondering if what you're currently doing for your bookkeeping or who is currently doing your bookkeeping, if they're doing it right, or you're just not sure if they're actually helping you get to where you're wanting to go, grow your portfolio, whatever the case may be. I definitely want to point out some things that I've seen over the last couple of weeks that I want to kind of make sure that you're aware of, especially if you're a co-host or a host, just trying to make sure that everything is documented correctly. Well, if you're new here, my name is Rosalind. I'm with Riggins Bookkeeping Solutions, and we help short-term rental hosts and co-hosts increase their profit margins without learning QuickBooks Online using our profit clarity system. So like I said, we're going to be talking all about some of the mistakes that I've seen when it comes to host and co-hosts books. So the number one thing that I've seen is just not categorizing things properly. So this goes more along with my co-host. So when you're receiving your deposits from Airbnb or Verbo or wherever you're receiving that money, oftentimes, if you are managing properties for other people, that money that's coming into your bank account isn't yours. It's your clients or your owners or whatever, however you want to describe them. That's their fund. So what you really want to be doing is actually making sure that your income statement does not state that that revenue is yours, because it's not. You want to make sure that it's actually on your balance sheet. So you're going to be using the approach of trust accounting to make sure that it's on your balance sheet as a other current liability. And the reason why is because that's your owner's funds. So when you're basically itemizing everything, so you're collecting the rent for them, you're paying out any expenses, so your housekeeping, your repairs, any type of maintenance that you have, if you do utilities or anything like that, or any other expenses that you have that are associated with your owner's properties, you want to make sure that those funds or that those payments are actually coming out of the funds that you've collected from the rent, the gross rent that you've collected from the guests. And then from there, you're going to take out whatever your commission is. So if it's 20, 30%, whatever it is, you want to make sure that that's itemized out. And then whatever is left over, that's what your owner wants to know. They want to know how much money they're actually supposed to be getting back. So this is one of the major things that I've seen on a client's now books. Their income was actually overstated by 50%. So basically, they're stating that they made 50% more money than they actually earned in the actual business. So these were their owner's funds that were basically associated with their income. So that's something to definitely be aware of, and making sure that your bookkeeper is separating that income so it's not technically yours, even though it's a deposit from Airbnb or just wherever you're getting the money from. Number two is going to basically be making sure that your chart of accounts is actually category or set up properly. So from there, you want to make sure so essentially it's a cost of goods sold or even just a cost of service. So these are going to be any expenses that are going to be associated with the property and not your business. So for example, you have your internet expense, your utilities. If you're paying for anything that's associated with a specific property, you want to make sure that that's separated from your portion. So if you wanted to do, especially my host, if you want to do your security, your utilities, your HOA, any things that are going to be associated with the property, those type of expenses that you need to manage or run your Airbnb or your property, you want to make sure that that's separated from your advertising and your office expenses, those type of things. So kind of keeping them separated by using the cost of service or cost of goods sold. Another issue that I see is oftentimes what happens is a bookkeeper may not know the answer to a specific question or an expense. So they may categorize it as uncategorized expense, or they may dump it in whatever account that they deem necessary, as opposed to asking the client to find out exactly what that expense is. I will tell you that working with us, our clients are going to get questions from us, and that's just make sure that we're we're able to best understand your business. So that way we're not categorizing something one way and you're like, hey, that's actually something completely different. Case in point, when it comes to, when you go to the grocery store versus when you go to Best Buy. When you go to Best Buy, 9 times out of 10, it's going to be an office expense. But when you go to the grocery store, it can be a lot of things. It can be groceries for your house personally. It can be groceries for one of your properties. Say you offer that as an additional service to your guests that come and stay at the property. We want to make sure that we're categorizing it correctly. So that's going to be another thing to kind of keep in mind. The third one is going to be manually entering anything into QuickBooks. So I definitely recommend trying to automate any way that you can, connecting softwares together that integrate so that way you're not having anything manually entered, because that increases your chances of something being entered incorrectly, entered as a duplicate, just having some type of manual issue down the road. So you just want to kind of keep an eye on manual entering things. And that also relates to journal entries. So I have seen lots of books where a journal entry is entered. If you don't know what a journal entry is, totally fine. But if you have a bookkeeper or an accountant, sometimes they do a journal entry. That's kind of one way to kind of get around entering each expense into QuickBooks individually. So they may enter a big journal entry, which kind of creates more of a headache down the road if you ever need to make any adjustments or anything like that. Now you have a journal entry to look at. Number 4 is not reconciling your accounts. And this really goes to outside of your checking and your savings account, your credit card. You want to make sure that you're looking at your loans or your loan balances correct when you're looking at your balance sheet. This is vital. If you want to make sure that if you were to present the balance sheet to a loan officer, or you're trying to get some type of financing or something like that, they're going to want to look and see what your current debt is. And if your debt isn't accurate, then they can't really help you make the best decision on future investments that you're wanting to make, or just getting more money for your business altogether. So that is one thing that we definitely pride ourselves in. We're going to ask for a mortgage statement for every property. Now, granted, we may not ask for it each month, because we'll basically create a spreadsheet based off of one statement, and then making sure that we are accounting for your mortgage interest, because that's ultimately what we're trying to make sure, is making sure you're getting credit for your mortgage interest and your interest expense altogether for your loans as well. So that's something to make sure that, that is correct, because that is important, especially when it comes to financing. And number 5 is going to be having sub-accounts. So QuickBooks allows you to have a basic general category for everything, but it's good to have actual subcategories. And what I mean by that is kind of how I was talking about your cost of good or cost of service expenses. If you want to look at that and break it down as far as like utilities, and having line items for like utilities, your subscriptions, especially when it comes to like your YouTube TV, your Netflix, that type of stuff. That's what I'm talking about for subscriptions. Your security, those type of things, you can itemize it there. Another option, especially for a co-host, if you want to itemize it on the balance sheet when you're looking at trust accounting. So when you break out your reimbursable expenses, you can itemize it there too, where you can say, hey, this is the cost for house cleaning. This is the cost for repairs and maintenance. This is the cost for supplies, just depending on how detailed you want to be. It'll make things a lot easier, so you can see where there are any issues, any money that's leaking out the back door, and really kind of curb some of those expenses, so you can make sure that you're, maximizing your profit. Because at the end of the day, you can have a great business. You can be in business for 20, 30 years, but if you're not making any money, if you don't have anything to show for it, then what are you really in business for? And so that's kind of something to really keep in mind when you're thinking about, all right, do I have the best person in place? Do I have the best process in place? Do I even have the right accounting software? Because I know sometimes people don't necessarily want to go with QuickBooks. They want to use a spreadsheet or use a PM software to give them the accounting functions. But yes, that's great in the beginning, but once you try to scale, you want something that's going to grow with you. And I'm not saying that QuickBooks is the all be all, but I will say that it is something that will help you more as far as reporting and that type of things, the things that you can pull, the data that you can pull out of it to help you really understand where your business is and how to get to where you're really wanting to go. If that's, paying yourself a full salary, like you're, working in your business. So those are the main things that I wanted to kind of hit on and kind of talk about as far as like just common mistakes that I've seen. And this is the books that I've seen really in the last 2 weeks, where it's kind of interesting to see when people come from other bookkeepers that either are not in the short-term rental space, and they just may be more of a generic type bookkeeper or just somebody that's learning on the fly. You definitely want to make sure that you are keeping these things in mind to make sure that, at the end of the day, whatever your books are stating, that's what you're reporting to, when you file your taxes, as well as when you're trying to get financing. So you want to make sure that that data is correct for those type of purposes. So if you like content like this, feel free to like and share it with others. If you want to get more information about us and what we do, you can follow us at Riggins Bookkeeping, as well as we have a Facebook page called Cash Flow Strategies for short-term rental host and co-host. That's where you can get just a little bit more bookkeeping and accounting type tips and information specifically for short-term rental host and co-host. And so that's going to be the best way to kind of get plugged in and get a little bit more information about us and things that can help you with your business. And if you just need additional assistance with, your bookkeeping, comment bookkeeping below, and I'll reach out, get you on our calendar, see how we can best help you and support you in reaching whatever goals that you have. But that's all that I have for you tonight. I hope you all have a great rest of your evening, and we will talk soon. Bye.